Good evening, guys. So this is Alice Crypto, and today I want to talk about a newly released project. It is called Hedget, and I just finished reading its white paper, and I think it is quite impressive. So in this video, I will briefly go through what is option and the features of Hedget and its tokens. So basically, Hedget, it is a decentralized cryptocurrency option trading platform, and it just finished its pre-sale, its token pre-sale, and I think it is quite impressive. So then let's go back to talk about cryptocurrency trading. We all know right now cryptocurrency trading, the most basic one is spot market, which means we trade cryptocurrency immediately, and we also have another option. It is called futures. So futures, it is based on our own prediction. We sign contracts to trade cryptocurrency at a specific date and with a specific price. So basically, it is leverage ups. But also we have another option which is more flexible than futures. It is called option. So just as its name, it is an option, which means it is a right. It is not obligatory. So you can choose to exercise your option or not. So what Hedgehog want to do is to provide a platform, and one of this feature is that there is no third party and counterparty risks. So because it will use Ethereum smart contract to keep your collateral, and your collateral must be 100%. So let's say if I wanna sell 1 Ethereum, I must deposit 1 Ethereum, and then I can write and call an option. And another feature of this platform is that basically the Ethereum only moves from the seller's wallet to the buyer's wallet. So there is no third party, no agency in the middle, so it is much safer. As I mentioned before, basically there are 3 components on Hedge. So the first one is Ethereum smart contract. So you need to interact with Ethereum smart contract to deposit or withdraw your Ethereum ERC-20 tokens, and also do physical settlement if you prefer. But also you can only transfer the amount of profit to the buyer if you don't want to do physical settlement. And the second component is dApp. So Hedgehog will apply Chromium blockchain to launch a dApp, which is the application to execute your options. And also there are the third components. It is the client-side wallets. So it is quite important because on Hedgehog, your collateral don't go to a third-party custody. It directly. Then let's take a brief example of how Hedgehog works. So let's say right now the price of Ethereum is 200 USD, and I predict the price will go up in the future. So right now I need to open an option at Hedgehog. So what I need to do is first I need to set a strike price. So let's say 210 USD. Second, I need to set an expire date. So let's say next week, and then when next week comes, the option will be exercised. And third, I also need to price my option contract. It is 10 USD. And then Hedgehog will issue me a short token. And then here is a buyer. He also thinks the price of Ethereum will go up next week. So he will pay 10 USD to buy my option contract. And when next week comes, the price of Ethereum goes up, but it goes up to 250 USD. So as a seller, I lose 30 USD. But for the buyer, he buy my 1 Ethereum at the price of 210 USD. So he earns, and immediately he can sell 1 Ethereum to the market. So it's like $250 minus $210 minus $10 for the option contract. So he earns 30 USD. But there is another condition. If the price of Ethereum goes down to, let's say, 180 USD. And in this condition, the option contract won't be executed. And as a seller, I don't need to sell my Ethereum, but still I have the $10 premium fees. But for the seller, he only need to pay the 10 USD premium fee. He loses nothing. And for me, because I hold 1 Ethereum, the price of Ethereum actually goes down $20. But because of I caught an option 1 week ago, so what I have done is I hedged against my own risk. So I only lost 10 USD in this condition. Let's have a look about those fee structures of Hedget. So their setting right now is like taker's fee is 0.04%. So it is the same as debit, but it is less than the fees on FTX. But for makers, the maker's fee is minus 0.02% of underlying. So it is a unique offer. So the 0.02 fee difference between taker and maker will go to special reverse pool locked for 2 years and governed by DAO. And the settlement fee 0.02% plus the Ethereum fee if the settlement is based on Ethereum network will paid by option buyers. And in the first 3 or 4 years, the 0.02 settlement fee will be paid by the system from liquidity mining pool, and thus rewarding option writers and reducing total fees for option buyers. Yeah, so basically you can also do staking and liquidity farming on Hedget. So in the end, let's have a look about the Hedgehog tokens. So it is like the tokens, it will serve as a governance token for the Hedgehog DAO to set up transaction fees as the reversers and general functions and features of the platform. Secondly, it will be used to prevent spamming for orders, which can lead to API overloads and order book manipulations. To prevent this, some amount of Hedgehog tokens will need to be staked. The greater the activity, the higher staking requirement. And about the token distribution, so there will be in total 10 million Hedgehog tokens minted at the launch of the network. The protocol has a fixed token supply. 10% of tokens will be reversed for team and advisors. The token will be unlocked for a monthly basis during 2 weeks, and 8.77% of tokens will be distributed through private sale, and 4.23 of tokens will be distributed to users and investors through public sale, and 50% of tokens will be locked for liquidity mining. Tokens will be minted on a daily basis and distributed to users who participate in writing options. 0.2% for underlying of each option settled, and also 7% of tokens will be used for decentralized exchanges, liquidity and trading such as Uniswap, and trading competitions, drops, and other activities. And also, the last 20% of tokens will be locked in reverse fund until 2 years after the platform is live, and the usage of these tokens will be determined by HGET. So that's today's video. I hope you enjoy this video, and I put the link of white paper here. I highly recommend you to read it by yourself. So, ciao.